BitGo made its presence felt at Money 2020 USA this past fall, which brought together leaders from across the financial technology ecosystem. Well, the company's executive director and head of fintech sales, Frank Wong, told JD Durkin how his company is standing out in this digital asset ecosystem and how new regulations are putting BitGo in a favorable position. Let's take a look.
Sure. So BitGo is essentially infrastructure for digital assets. Right? We are both a software company that has created wallets that clients can use to build their product or interact with digital assets. We're also a regulated custodian by way of our trust company. In that capacity, we use the technology that we've built to custody assets on behalf of our clients. At some point earlier this year, I think we breached $100 billion in client assets under custody.
What have been the biggest opportunities, but maybe also the biggest challenges, the biggest headwinds you faced, specifically on the custodial side of the business?
The regulatory environment, I have to say, was more difficult up until, call it, November of last year. And so I've been at the company for a few years now, and so it was difficult navigating. There's market demand for digital assets, while frankly the regulators didn't make it easy for us to operate. Even as regulated as we are, there were blockers, right? It was difficult for us to get a bank account for a long time. Even as a regulated financial institution, banks were leery and very wary of banking us, even though we were as regulated as it comes. That has changed dramatically over the last year or so. And so it's sort of become open season for us, and a lot of those sort of blockers have disappeared. So yeah, it's open season now.
What have been some of the biggest regulatory changes for you at BitGo in 2025? And I wonder, are there more to come? Are there more that you hope continue to change as regulators and policymakers in Washington start to take these conversations a bit more seriously and bring them to the forefront of their priorities?
There has been a wholesale change in the attitude of the federal administration towards digital assets, right? And so all the three-letter agencies went from either being neutral or in some cases hostile to digital assets to being constructive to the industry, whether it be at the FDIC, the SEC or the OCC, what have you. One major change for us is that the OCC has become more friendly and open to digital asset companies obtaining charters. And I'm not telling you anything that isn't public. You can go to the OCC website and see this. We have filed to convert our South Dakota trust charter into an OCC charter as a trust bank. That'll allow us to custody assets now under federal supervision, right? And that was something that window was closed for a long time, and it's recently been opened. And it's an example of regulators changing their posture to be more constructive towards the industry. And we welcome that, right? We actually want oversight in certain ways, right? We want to be doing what we do with oversight from a regulator, because that ultimately protects our clients who trust us to hold their assets. So that's one example of where changes in sort of regulatory posture at the federal level has really been helpful for our industry.
In terms of serving clients, not just in the US, but around the world, what have the building of those relationships looked like? Keeping in mind that obviously there are different rules of the road to doing business in the Americas versus Latin versus Europe, et cetera. And I imagine at times there's a deeply rewarding ability to be able to successfully pull it off, but no shortage of challenges to be able to navigate regulatory hurdles that change dramatically country to country.
Every country, every jurisdiction has their own rules and regulations on how to interact with digital assets. We have largely tried to go where there is strong regulation and set up shop there. As an example, we are a BaFin regulated trust company out of Germany, right? And that gives us the ability to serve clients in a regulated way across much of Europe. We have set up shop in Dubai and have a regulated entity through the Virtual Assets Regulatory Authority, VARA, that allows us to serve clients in that region in compliance with those specific rules, right? We've done the same thing in Singapore and are a major payments institution through the Monetary Authority of Singapore, or MAS. And so we've gone to where there is strong forward-thinking regulation, where the regulators are saying, hey, we know what this thing is, we know what this crypto digital asset thing is, here are ground rules that you can play by, and we've filed for regulated entities there. So We've got a number of these regulated entities around the world and are looking to service clients in those jurisdictions in such a way that those clients can say, hey, we're facing a regulated entity in our jurisdiction, right? So their clients saying, well, as an Asian company, why would we contract with a US entity? And now we can say, well, look, we have an entity in Singapore with a strong regulator that, hey, can service you as an Asian client.
Finally, what would be your outlook for the digital asset industry for 2026, the things that give you most confidence about the road ahead?
We are really excited about what's coming next. We're building a lot of really interesting things, but what we're also seeing is merging of traditional financial services and digital assets. And what I mean by that is there is this narrative that, digital assets are here to displace traditional banks, displace traditional rails. We tend to think that those two worlds are going to merge instead of one displacing the other. You're not going to get rid of banks overnight. I think we actually need to work with the banks to enable a broader, audience of consumers and businesses to touch digital assets. And so, there are 4,500 banks in the US, an equal number of credit unions. They're all going to have to figure out how to interact with stablecoins and digital assets. And we as an infrastructure provider are pretty excited about that opportunity because, hey, look, we're A, regulated, B, and have been in the space a long time. We would love to be partnering with banks to enable them to touch digital assets.
Thanks again to Frank Wong and JD Durkin for that interview.